Hello everyone, this is Brent from Enter Your Wealth, and I'm so happy that you're here today because we're talking about covered calls. What I'm going to be talking about is the 3 best practices that I found worked really effectively with covered calls. So here I'm in Robinhood, and we're just using Robinhood as an example. I can show this on a different platform too. But here we're looking at Snapchat. Rule number 1 is you want to buy fundamentally strong stocks when you're doing covered calls. So there's a lot of covered calls that you can be doing that will get you like a pretty nice premium based on a lot of factors. Volatility is the main one. So there's stocks that become really volatile, right? And then you might want to sell covered calls on it, but that means you have to own 100 shares of the underlying stock. If you're buying a risky stock, then the stock can go down like 20 to 50%, and is selling covered calls on that going to really dig you out of the hole eventually? Probably not. Or if it does, it'll be taking a while. So I'm just using Snapchat. It's one of the stocks that I have strong feelings for. So rule number 2 is choose a 2-week expiration. A lot of people like doing 1-week expirations, but in my opinion, 2 week has worked the best for me. 1 month is a bit too long, but 1 month is also pretty good. And I feel like 1 week is not usually worth it a lot of the times. So what I will say is 2 weeks is usually the best to do. So I will choose the 27th expiration date here, which is about 13 days away. Next is what's important is to choose the right strike price, right? So when we're selling calls, you want to be choosing a good probability here. You see that the share price is at $75. You see all these chances of profit. Depends how married to the stock you are. So if you're taking fundamentally more risky sells, and it's not really a risk, you're just capping your profits. All-time highs for Snapchat I think is only like $78. So really going above its own all-time high, or I would even say to this number right here, is pretty unlikely, right? But you can see it, the higher you go out of the money, the less you're going to be getting paid for, the covered call. So you want to kind of balance that out too, right? Down here, so I'd probably choose this at 80%. So it's between 75% and 85% chance of profit is what you want to do with the covered calls. That's really important. So choose a stock that is between 75% and 85% chance of probability. Choose a strong fundamental stock that you don't mind holding long term. Buy a 2-week expiration more so than 1 week or 3 week, but I'd say 2 weeks to a month is the best range to do it. If you like this video, please like, comment, subscribe, and I'll see you next time.